Good afternoon, traders. This is Chris Buss with Traders Profit Compass with a closing market wrap for Wednesday, February 23rd. Okay, so another day of selling. What I'm going to do this afternoon is zoom out to the daily charts of the indexes, market leading FATMAAN names, and also a look at semis and the ARK Complex. So starting out with SPY, what I've done here is in green, probably the wrong color for this, but I chose green, are the measured bear flag moves where they project to on the downside. So as you'll recall, take the first leg down, go to the top of the bear flag move and project it down, same length. So on SPY, measured move target is 405. I do have a layer of support here at, where it closed was right on the January low, right down here at 421-ish. There's a level of support down around 410. And then there's a put wall where there are a lot of hedges and otherwise bearish bets down at 405. I would expect that to hold. It's uncanny how these technicals work. Of all the places to have a put wall, it's exactly at the bear flag measured move level. So tomorrow, should we break that January low, I think it's going to bring in more sellers. That's usually the case. So if you're short, what you can do is just use that tomorrow as your pivot. If we break lower and then quickly recover, that would be a warning sign, because if we break below, we should not go back above. And what happens is, I'm always leery. I've done a lot of short selling in my day, and one of the most vicious things you can ever have is a bear market rally when everybody, finally gets the idea that buy the dip isn't working and now I'm going to get short. They rip it the other way, and all the shorts have to cover, and that's why those rallies can be so vicious. So, just as an example, everybody and their brother is looking at this January low. I mean, you've heard me talk about it. Every technician in the world talks about it. Every algo has it, programmed. They know exactly where that line is. We're not the only ones that have charts. Everybody's got them. So the normal thing would be, you break below 420. Oh my God, support breaks. Go down a little bit, suck in a lot of shorts, and then rip it the other way. That's something you've always got to be cognizant of. And that's why in my notes and in our prior discussions, I always say, keep a short leash on your shorts. And what I mean by that is, when you go into the money, continually roll those things down to even money, because there will be a day when you get caught on the wrong side of that bear market rally, and you do not want to be sitting there with a full book of shorts that are deep in the money. That will be really, really painful. So what I recommend, when you get up 50%, when you get up to a double on a position, roll those positions down to even money. And if the sell-off proceeds, you continue to make money. But the day they rip it the other way, your losses will be contained. So keep that in mind. So tomorrow, this January low here at whatever it is, 421, is going to be your pivot. But I do have a measured move target down here at 405 where the put wall is. And if we get some kind of a massive 3% day, I mean, it could come tomorrow, maybe not. But if it does, that brings you down to 405, I would be covering there, because I think there's going to be at least a technical bounce there at 405. Qs. We broke the January low. Now we're down here at approximately 330, 329 and a half. I do have a little layer of support right here, but below that brings us down to 315 and 310. I didn't do the measured move here, but you can do it yourself. You can take this move and project it down. I mean, you can visually see that that's going to bring you down into this 310 area, and that would align really well with where the large volume over price bar is here on the chart, which would bring us down into that 315, 310 area. So the selling, as you've noticed, has been focused on, not exclusively, but focused on the NASDAQ, and it was down 2.5% today. The other indexes weren't down as badly as that. But you can see here, we just had we are persistently in the bearish regime for RSI and not oversold. And here we just had a fresh bear cross on momentum. And as we've discussed, keep driving it home, when you see a bearish cross on momentum below the zero line, very bearish, because that means you can look forward to, with the momentum turning down, you can look forward to even lower momentum, or momentum to the downside, depending on how you want to look at it, looking for lower prices. And when depending on the type of bottom that we have, when you see this start to come up, flatten out, and begin to roll, that's a heads up on a reversal. So when you're looking at your charts, it doesn't matter what time frame, 60-minute, 5-minute, whatever it is, whatever you're trading, when you see that momentum flatten out and curl and start to go up, usually at a support level on the chart, that's your heads up to cover. IWM, again, RSI pinned down below 50, persistent in this bearish regime. Momentum, same thing, below the zero line. And just today, we got a fresh bear cross on momentum below the zero line. So that tells me that it wants to go lower. And we've talked about ad nauseum that from a technical standpoint, IWM is the most bearish of the three. Why? Because you've got a full bear stack on your moving averages. You've got the 50 below the 200, you got the 20 below the 50, and you got the 8 below the 20. So that's in full bear mode. And what I've done here on the bear flag measured move, top of this one, move down, bear flag, measured move is off the screen. It's down at about 170. Look at the weekly chart real fast here, and you can see that down here at the 50% level, down around 165 at the 50% retracement, that aligns really well with this bear flag measured move. So below that January low, right down here at 190, that's going to be where the I would assume the floodgates would open. So be very cognizant of that. Facebook lost 200 today. We had been watching this. Of course, we had the big gap down and it's moved lower. I know some of you are in that. Congratulations. I'm not. We're down at a point now where if there's some type of capitulation selling event, this could easily come down into this 180, 185 area. And if you're short, you just use 200 or 201, wherever you feel like, the reversal is there. I mean, I have it marked at 201, but I see here I could easily move that down to 200. I mean, $2 on a $200 stock is not a whole lot. So, I mean, I would just use 200 as your no-go line for shorting. And if you are short, I would be looking for 185, low 180s, 180, 250, something like that on a move down. Apple down 2.5% today, moved right down to this intermediate trend line that I have. We lost all the moving averages up here, but we still have the rising 200 down here at basically 153-ish right in here. So I've got this intermediate trend line. I've got support at 157.50. That needs to hold, or you're going to come down into this longer support trend line down towards 153, 152, where the 200 and this trend line come together. And I think at the very least you would get a bounce there, not only because of the 200, but because of this trend line. I want to show you the 60-minute chart. I mean, this thing worked like a champ today. We had a push up here right to close that opening gap, and then it let go, and then we had this big gap from before at 163 that opened the floodgates, and it has moved down, has a little bit farther to go down to 159, and then here's that 157 level that comes in on that support, and that's where it had originally broken out from before on this prior run. It was back tested here, and then we bounced and we came back down. So what I'm looking for tomorrow on Apple is number one objective is to simply fill the gap. There may be a bounce there, there may not, but if it doesn't, look for 157 on your as your second target. Are a little bit oversold here on the 60-minute, but if you go back to, let's see where the daily chart is, I mean, we're not even nearly oversold, got a long ways to go. Notice right here a fresh bear cross right at the zero line. That's bearish, no other way to say it. So I expect if this doesn't hold here tomorrow, come down, fill that gap, come back down to this 157.50 area where the original breakout happened and where it was tested before, right down here at 157. Devastating day for Tesla. I mean, down 7%. PPO is in the weeds. RSI pinned below, well below 50. We lost the 200 decisively. It had been wrestling with it here for a couple of days, and we had been watching for that. So now what I'm looking for is first support down here towards 726, let's call it, and then down towards 700 and then down towards 650. And it's interesting. Remember, we talked about this $200 range. Once we broke it, where's our technical target? $200 lower, down to 800 from 1,000. So 1,200 to 1,000 was our $200 range, and we broke that, and we tested that 800 level back in January, and now we broke it. So really, really bad candle, and that was reflected in ARKK as well, and we're going to look at that in a little while. But I would anticipate that this will continue down into this 725 area, where you may get somewhat of a bounce. Microsoft, this is a 60-minute chart, but it worked great today. All our levels, we had talked about 290 being good resistance. We got right up in that area, and then came back down through it, and then right on down. So, I mean, these levels have been working like a champ. Now that we're below 282, really nothing stopping this from going down and touching that January low back at 276. So that's still quite a good ways to fall. And where I would be cautious is if we again move down and then move back up above 282 quickly. That would be very much cautionary. And let's look at the daily chart just to get a read on it. Yeah, you can see this big bar today, 2.5%, coming down towards this January low, down below the 200 that comes in 295. And if you're more of a long-term trader, remember, just you can use that 200 as a go or no-go line, in the sense that we always say nothing good happens below the 50. Well, you could certainly put double exclamation points once you're below the 200, because that is the go, no-go line for a stock in an uptrend, is holding above the 200. And you can see here how the 200 has flattened out, and the longer this stays below the 200, this 200 is going to start curling down, and then that will be resistance on the way back up on any kind of rallies. So I see Microsoft going lower. Notice here, fresh PPO bear cross on momentum, and like all the others, RSI pinned under the 50 level for quite a long time. So that doesn't look very productive for the bulls. Amazon, big bar down today, went right through this 2950 area without even really a bounce, and now we are well into this big earnings gap that we had in early February. Remember, we hit these lows, we came up, and then dropped right back down here to this 2775 area, and then they had the big gap up on earnings, which fueled this rally, but that has since been faded, and now we're inside this gap here. I would anticipate that barring some massive rally, that this is going to go ahead and fill. There's not a lot of technical support down here, as you can see, kind of a gap in the chart. Nothing really comes in until this 2775 area. And I want to show you the weekly chart. I know we just went over this, but if there's any new viewers to the channel, first of all, welcome. But we went over this over the long holiday weekend, we've got this big $600 trading range that spans from 2,900 to 3,500 on the weekly chart. Had a couple of false breakouts, and now you can see this move down, this bear flag, bear flag action. We've got the Fibonacci retracements penciled in here, and if and when we break below 2,900, which we closed right on it today, but a weekly close, so on Friday at the close, if we're below 2,900, that opens up a $600 measured move in Amazon that would take it from 2,900 all the way down to 2,300. And you can see back in the charts a big, massive void in the charts here where this had just rocketed up so quickly. There was not a lot of trading in this area. So when and if we break, then there's not going to be really any buyers back down in this area. The only place I would say is potentially at this January low right here. Maybe some bold souls that want to step in there and give it a bounce, but the odds would definitely be in the favor of the bears on a break of 2,900, and especially if it gets down into this January low area, and if that breaks, then it's all over. So not looking too good. Google's not looking too good either. RSI under 50, fresh bearish cross here on momentum. You can see the size of the candles, rather large. They're not small, and that's an indication of impulsive, steady selling, and that's what we've seen across the board. And you can see here that just in the last couple of days, we've lost the 200, and now we're attacking the January lows down here towards 2510, 2500, depending on if you want to count the tail or just the body. But regardless, we're on a path to test that area, in the next few days, and then that'll be a big test, because if that breaks, then more selling should ensue. Netflix daily, we had the big gap down that actually went all the way down here. Bill Ackman and company got involved here, made a big deal of it, got a big run up here to 460, and that has since been faded, and now we're attacking those January lows down here at 360. And you can see on the daily chart, below that level, you got to go way back in the charts to start finding more support. Let's look at the weekly just to get a read on it. Yeah, down here at 350 was the January low. You can see that coincides with a large volume over price bar. So that low is going to be very, very important on the charts, because below that level, then you got a big void in the charts back here, and we'd be looking at a round trip, a rally, then back to where it started, back here in the 260 range. So that would be something where you may want to get involved on a break of 350, because there's a pretty high risk reward. And if all these January lows start to be taken out, across the board, Amazon, Google, Microsoft, Apple, all that stuff, then you can see on the charts there's really nothing left until you get down here to 260. And just remember, stocks can go down more than you expect them to, just like they can go up more than you expect them to. And if you look at it, this breakdown started at over, let's just call it 625. Take a measured move of this, down here, and then here's your bear flag. You project that down. I mean, I can just tell visually that your measured move is going to be down in this area, if not lower. So given all the factors in the charts and where support is, I think that 350 is going to be super, super critical. On the semiconductors, again, big leg down. First move. Here's your counter trend rally. Bear flag measured move is 240. We're coming in to where those January lows were. We got one here at 256, and then we had the spike low down here at 248-ish. I mean, if you break 248, I mean, you're going to 240 immediately. So just visually and technically, 240 seems like a reasonable target. There is a big level here. You can tell that was important because we had lows here, and some lows back in here. So that's going to make that low even more important. It didn't stop there on a dime just by accident. It was where all this support was. So down here at 248 is going to be really, really important. Let's take a look at ARK. As you know, we've been kind of focused on it. We talk about it a lot. Looking at a measured move on the ARK financials, or fintech, whatever they call it. First leg down, beautiful bear flag, and then we had the breakdown the other day, and then just in the last day or so, we lost the low here at 28.50, and so the measured move target has it coming down to like 23.50. And you can tell in the charts, not a lot down here to really stop it. That's not to say that there can't be a kickback rally that brings it back up above. But I think this is a short, and they just keep going after PayPal and Square and all those guys, just hammering them. And so now I think you can stay short below 28.5, be looking for 23.5. And just to let you know, I do eat my own cooking. So what I did here late in the day was I rolled my short down to 27. So harvesting these gains here, staying short, but taking a lot of the risk off the table in terms of, that short positioning. Should there be a rally, I'm going to be much more able to stomach a loss being positioned at 27 than to have that deep in the money deep in the money put come back on me. That would be painful. So what I did here was roll down to even money at 27, looking for more in the March contract. And I think just now that I mentioned March contract, the March expiration is right after the Fed announcement. I think the date is March 22nd comes to mind, and that's going to be the week of, I believe, when the Fed announcement is made. So that's going to be a really important expiration, and I think it may be a situation where, right now they're selling the rumor. Once clarity is given by the Fed at that March meeting, it may be a situation of buy the news on the Fed announcement once that clarity is provided. So I think until then, it's going to be rough waters. That doesn't mean straight down. I just mean very choppy with a bias to the downside until that Fed, that first rate tightening is announced, whether it's 50 or 25, and whether they say anything about the Fed balance sheet rolling off. And also remember, starting, at the end of this week, 1st of March, no more bond buying. So that could cause some turbulence as well as that liquidity pool starts to drain. Moving on to ARKG, just wanted to point out, we have been following this way back when, and we actually, on this break of this big symmetrical triangle, or right triangle, we had a measured move target of 38%, and we put it on, way back here, and that measured move was achieved. And so now what I've done with the brown arrows is project the bear flag measured move of the most recent bear flag. So we had a move down, had a bear flag, come back to back touch the breakdown, and then the bear flag measured move has you coming down to 35. And no coincidence that is where the original breakout occurred. So on the ARKG, looks destined for a complete round trip back to where the whole thing started, right at the coming out of COVID, and then this thing took off like a rocket. Sorry I wasn't in it for this, but if you can't get this, maybe you can get this. So whenever you look back on a chart and you're disgusted that you weren't in this run-up, it's okay to be disgusted for a second, but then look for the next opportunity. And the next opportunity came definitely here on this break of 70, if not before. This was a little tougher trading, but once it broke 70, then it's been lights out. ARKK, this is the one that has a lot of Tesla in it. Very nice chart. From a technical standpoint, we've got the first leg down out of this breakdown. Very nice tight bear flag. That's what you want to see. And then the bear flag measured move coming down here towards 52. I haven't looked at the weekly chart, but we can do that. Turns out pretty much the same place. I think it's important to note on the weekly chart, we are already below this high volume overpriced node. So that means we've already gone through support on the weekly chart. And so now really not a lot to hold it between 60 and 53. And remember, with all that Tesla in there, at a certain point, I don't know when that might be. For ARKK, Tesla is going to be a source of funds. Like if there's redemptions in that ARKK fund, the logical place to do it is in your most liquid and biggest name, and that's Tesla. And that could be a catalyst for more selling in Tesla, which will of course in turn mean lower for ARKK. So I see this coming down to that 53 area. ARKW, another beautiful technical setup. First leg down, tight bear flag right up to the downtrend line. Failed right at that point, and now we lost the bottom of the bear flag, and now it's out in air. Let's look at the weekly chart to get a read on it. below this higher volume node area. You had, this was the pre-COVID high. This was the breakout. I'm looking for 70, another complete round trip. Just like the other ARK names. So in essence, we will, be back to where we started. And so the point to look at in the future is if 70 were to break, and that would mean, all these people that may be, sitting through this whole thing, then, these people are going to start being underwater. That's way down the road. I'm not predicting that, but I am predicting that we find 70 sooner rather than later in ARKW. So I see lower. I am kind of concerned about, now everybody's getting bearish, and I'm concerned about the rising possibility of a snapback rally. So don't overstay your welcome. Keep a short leash on it. Each morning when you get up, know the level that you want to get out on any kind of kickback rally. And by all means, continue to roll down your shorts and stay, pretty much at even money, especially if you are, highly profitable on a name, on a big whoosh type move down. Take your profits. You can stay short as long as there's no sign of a snapback, just to protect yourself, and don't overstay your welcome. Nothing goes down forever. We are going to find a level of support. I do favor lower, especially into that March Fed announcement meeting. That's also a quarterly option expiration, and at those big option expirations and macro events are often turning points in the market, and I think it may be a buy the news event once that uncertainty of what the Fed's going to do, what the plan is going forward. I think that'll be a point where people say, okay, now we know, rip it higher, and God help anybody that's, piling in short late to the game, because then, they get their face ripped off, and we don't want to be in that crowd. So play it close to the vest. Don't get out over your skis, and we'll ride this thing down as long as we can. And then if we're sharp enough or good enough, we can get that kickback rally as well, which can be really violent. And if we watch our P's and Q's, we'll know where those levels potentially could be, and then we can flip long for either a burst of a rally or an extended run higher after everybody knows what the Fed is going to do. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Hope you got a lot out of the video, and talk to you bright and early tomorrow morning. Good night.